Chris Dixon is the founder and managing partner of A16z Crypto, Andreessen Horowitz's VC fund for crypto and Web3 startups. He's also the author of a new book, Read, Write, Own, Building the Next Era of the Internet. We're having a lot of Silicon Valley people on of late. We had Aileen Lee on last week. Welcome, Chris.
Thanks, Kara. Thanks for having me.
So it's been a rough couple of years for crypto and blockchain, but you're still making a case for it in this book. Actually, Scott has too, in a lot of ways. But why don't you explain why you're still a believer?
Yeah, sure. So, I mean, in the book, I try to explain what I would call the productive aspects of blockchains and why I think that blockchains can help us return the internet to its original ideals as being an open and democratic network, which is why I got involved. I've been involved in the internet for 25 years. I got excited by the early ideals of the internet. And, look, if you fast forward to today, the internet's become very consolidated. The top 5 tech companies account for half of the NASDAQ 100 market cap. Top 1% of social networks, 95% of traffic. Google and Apple have a duopoly on mobile operating systems. I'm sure you both have talked about this plenty. The internet, I worry the internet's at risk of becoming like 70s broadcast TV or something where you have 3 channels. And I think that's bad for the world. I also think it's bad for our business. We're in the startup business. We want a dynamic internet.
But you write about blockchain technology, and this is a quote from you. This is a chance to create the internet you want, not the internet you inherited. It's something we talk about a lot, like that the same companies are in charge. What do you mean by that? When you say there's lots of opportunities for innovation here that starts from ground zero, presumably, versus starts with Google in charge or Microsoft or whoever.
I'm guessing that we somewhat agree on the problem, meaning having 5 companies control everything is not ideal. I think there's different ways one could think about solving that. And so, for example, a lot of people talk about regulation. I believe there is a role for regulation. I think we'll see what happens with DOJ and Apple and things like that. My proposal is to also try to do it through innovation, and through that, we want to create a new wave of internet services that return power to the edges of the network. And so, to give you an example, one of the reasons that social networks are so powerful is you're locked in. Right, they have network effects. So, I think you switched recently to Threads. And when you did, you had to give up your audience, right? You had to go build a new audience.
I'm still over there because I got there first, but go ahead.
But okay, so you maybe you're the exception, but generally you're locked in, right, to these networks. So and especially if you're like a creator, for example, and you build a business on TikTok or Instagram and you don't like the fact that they changed the algorithm or did some other thing, you're locked in. And so one of the key aspects, for example, in these new blockchain-based social networks, which is one category we're investing in, is a user owns his or her identity and they own their followers in the same way you do in the email world, right? So if you have a newsletter on Substack and you don't like Substack, you can switch and you can take your followers with you. So that's just one example of how a different architecture, by empowering users with ownership, this is the read, write, own. And that's what I mean by ownership, is a user controls their followers, not the service. That change in architecture, I believe, can have sort of profound downstream consequences on the ultimate control of these services and the economics. And these networks, I don't think we knew this 10 or 15 years ago, but today we know they control the flow of global money, business, culture, politics. They're very, very important. And I don't think that having 4 or 5 people, whoever they might be, maybe at one point you like the management, at one point you don't. I just am fundamentally against the idea that 5 people can control those things. I think that they should be more like the early web.
You're talking to people who like to own. So Scott, go ahead.
Chris, good to see you. So, and this may be the wrong bucketing, but I think of blockchain in terms of front-facing applications as bucketed into 3 areas. There's the tokens, crypto. There's NFTs and there's DAOs. DAOs haven't really gotten any traction. NFTs, I think, have lost 90+% of their value. I think I'm being generous there. And the token market's been kind of, loosely speaking, in terms of market cap, been cut in half, even with its resurgence from its peak. Talk about those 3 categories and where do you see the opportunity?
Yeah, so I think with DAOs, so a couple of things. There are active DAOs. A lot of them are around these DeFi protocols. So, for example, Uniswap and Compound and Maker what's interesting about them is they're networks in the same way that Facebook is a network, but the users control those networks. And those are networks that have active Uniswap had trillions of dollars in trading volume, and the users decide how to upgrade the code. Admittedly, that is early. Those are experiments. In my book, I have a section on what I call network governance where I talk about this. And my argument is essentially that it's a very powerful new way to design community-governed systems. I don't claim that we've fully figured it out. I think that it requires a lot more work to evolve. NFTs, like the NFT standard was finalized in 2020. Then we had this, big rise in the market. Last year, in 2023, there were $8.6 billion in NFT sales. So I think the sort of decline has been exaggerated.
But how much of that 8.6 billion do you think is false flags? Is people trying to pump up the volume?
According to, we have a data science team, and I asked them to pull these numbers, and they believe that's removing wash trading, if that's what you're referring to. So they do believe that. But look, admittedly, it's hard to get the exact numbers, but I think that's a pretty accurate number. So NFTs. And look, I think NFTs went through. The way I kind of look at these things is like the internet. We all, I think, lived through the internet bubble, right? I kind of began my real career post-internet when everyone thought the internet was over. And the way I view it is a lot of these new technologies go through these cycles where people get overly optimistic, and I think that probably happened with NFTs. And now I believe they're overly pessimistic.
All right, let me ask you about that, because you talk about the casino culture of crypto, which has become the dominant narrative, and obviously the Binance thing, Sam Bankman-Fried, et cetera. Talk about the less nefarious side, and what about the impact of those cases? And also, the SEC did approve Bitcoin ETFs a few weeks ago. The price of Bitcoin has been falling.
The casino stuff, yeah.
So overall, it's sort of in that moment. And I would agree with you. There was a lot of real scammy stuff at the beginning of the internet for those who weren't there. And it went on for quite a while, actually. But talk about sort of that, how to shed it, because I think people think of it now with FTX, even though they made a great investment in Anthropic, it was mostly not a good story for crypto, or in general.
In my book, I have a long section where I talk about this, what I call the casino, and I'm again very against it. And I think it's destructive. I think it's destructive primarily to consumers who are victims of things like FTX. But I also think it's quite destructive to what I'm trying to work on, which is to build a productive side of these technologies. But look, the way I would describe it is a blockchain is a tool. Tokens are a tool. Right. And just like any tool, a hammer can build or a hammer can destroy. And there's two sides to the tool. And I think there's been a lot of attention paid to the casino aspect. There are, we have dozens of startups in our portfolio who are working on the productive side. And the reason I wrote the book partly was to tell that story, because I do think that's a bigger story than people realize. I also think that we need more proactive policy. We've been calling this for years, since before FTX, to put guardrails around the casino stuff, to eliminate the offshore activity. I mean, look, I was involved. I mean, the reason we were not investors in FTX is I was involved with Coinbase for years. Coinbase, contrary to, I think, some popular perception, it was heavily regulated. Their Bank Secrecy Act regulated. They do full KYC on all their customers. There's a whole series of regulations. They're audited. They're a public U.S. company. Binance, FTX, there's a whole series of companies that were offshore, not audited. All these other kinds of, all these running exotic products. I mean, that's the kind of stuff that I think we need to clean up and have very clear rules.
What about the Bitcoin ETF? It does sort of introduce consumers to it in a safer feeling way. If I'm getting it from Fidelity, I certainly trust them more than even Coinbase, for example.
Yeah, and I think the Bitcoin ETF was in my mind, is a net positive in the sense of it's sort of more institutional acceptance.
Oh, you say net positive. What's the negative?
Oh, it's good. No, sorry. I mean, it's good overall. I'm very focused on the utility side of building applications. And so it's a new financial instrument. So for me, it's less of a focus. That's what I mean. And it's just not, I would love for more of the news cycles to be focused on, hey, this person just came up with a cool new way to fight deepfakes. This person just came up with a cool new business model for creative people. I think specifically with the rise of AI, I see a lot of blockchain applications as the countermeasure in many ways. So just to go back to, maybe if I could talk about the deepfakes for a second, we're now going to have an internet awash with fake video, awash with, very advanced phishing.
Yeah, we have it, actually.
Yeah, we probably have it.
Talk to Taylor Swift this week.
Yeah,
go ahead.
Taylor Swift. You can simulate people's voices perfectly now. They can take your voice from the podcast. Yeah, they can then call. I actually had a partner, Martine, who someone called his parents using his voice to try to get money. This is actually like a real thing happening. And so in that world, we need to use, I believe, tools like cryptography to authenticate things. And I think, for example, one way to do that is one thing a blockchain is very good at doing is storing an immutable audit trail. And so you can have an immutable audit trail that says this video is attested to by, it came from Kara Swisher, and it was attested to her by her, as an example. And so it gives you this ground truth in a world in which you lose that. I think also blockchains allow for new business models for creative people in a world where, like, generative AI will put significant downward pressure on the ability for, let's say, an illustrator to sell things, right? If you can just go to Midjourney or something. And so, I think it becomes more important in an AI world.
So when I think about kind of the consumer-facing technologies that have built so much value in tech, and I think about the leadership there, I think about the original gangsters. I think about Gates and Jobs, and then the new guys, and they were all guys, Brin, Page, Bezos. These, say what you will about them, they're all visionaries, and I would argue at their core, they were all. I'll go on. I think they're good people, and the two kind of iconic figures in blockchain are either in jail or going to jail. And my question is, who's the next generation of leadership that you would point to that will, quite frankly, just sort of clean this mess up? Because right now, from a public perception standpoint, it feels like a levered Ponzi scheme.
I think there's just two very different worlds, Scott. So I think there's the SBF world, and then I think there's like people like Vitalik Buterin and Ethereum.
Well, you mentioned Brian Armstrong, or you alluded to him.
I think Brian got. He got flack for years for being slow. I mean, their market share got low single digits. They were getting crushed by Binance and FTX. If you talk to any Silicon Valley VC, it was like, why is Coinbase so slow?
Stocks gone crazy. They're doing really well now.
And then and Brian kept. I think what he did was admirable. He really kept his head down. He never changed what he does. He invests very heavily in security and compliance. And he hasn't gotten all the market share yet, but I think that approach has proven correct. I think Brian has done a great job. I think there's folks like Vitalik, and there's a lot more. Look, there's these conferences like you go to DevCon, it's an Ethereum conference, and there's like tens of thousands of very earnest kind of, thoughtful technologists. And it feels to me kind of like, 2005 Web 2 movement when I was part of that. And you go to these things and look, they weren't, you never know who the Larry Page is at the time. Obviously Larry Page is, I'm sure, brilliant and everything else. I didn't know him. Over time, these folks will emerge. And I would say I think there's a very strong, productive, positive movement that I think just gets kind of crowded out by all of the coverage of the casino stuff. But I think it very much exists, and that's why I wanted to write the book. I wanted to go through in detail and explain this and make the case.
Let me ask that then. I was just looking at Coinbase stock, which is up recently, but it's certainly down from 2022, like quite a bit, or 2021, especially when it was in the what is it, high was 332, and then it's now 131. It was down in the 80s and 70s and stuff like that. But using them not as an example Scott called them the AOL of blockchain, but nonetheless,
is that a good thing?
No, I don't think so.
Okay. It was for a while.
It was for a while.
It was a great thing for a while. It was great till it wasn't.
But it has been around for a while. And does it have to be mainstream? Because AI suddenly is everywhere mainstream. It seems ubiquitous everywhere. Does it have to be mainstream, or just we're the electricity, we're the I don't know, the drywall or whatever. I don't know.
Yeah, in my book, I analogize blockchains to steel in the sense of like it's a building material, right? Because people sometimes say, what problem does it solve? And I really see it as a building material for building better internet services. So I think ultimately, if the movement that I'm part of succeeds, some parts of it will be visible. The fact that you can, hey, there's a social network where I can exit. I can sell digital merchandise as a musician directly to my fans. Like, you'll see parts of it, but you won't see all the plumbing. And I think most of the plumbing is behind the scenes. And by the way, it may happen with AI too. Maybe AI is just sort of baked into everything. I think it's probably a likely outcome.
AI feels more like the internet, right? It feels more like or a web or something like that. But if people wanted to get into crypto right now, where would you tell them to start?
I think there's a lot. So some examples of things I'm excited by. We have a few things around music. So there's project called Sound XYZ where musicians today don't make money on the internet. They make very little money on streaming. A lot of them, if you ask them, will say they go offline and they tour and they sell merchandise to support themselves. And so there's various projects like Sound XYZ that let musicians sell backstage passes and digital merchandise to their consumers and add additional income stream. So that's one interesting area. There's a social network called Farcaster that's a lot like kind of something like Twitter or Facebook, except the user controls their name and their followers and can move around, and developers can hack on it. Kara, you remember early Twitter, how it became like a developer platform? Like I was very excited by Twitter at that point. Those are two examples. Look, there's also the stable coins are quite popular in the developing world. There were something like $600 billion in stablecoin transactions last month. So there are also other, as I mentioned, NFTs I think are bigger than most people realize. There's a bunch of interesting games that are launching. Like we have one, it's sort of a Zynga style game called Pirate Nation, where you have NFTs as digital collectibles. EVE Online, it's a very popular video game. They're launching an NFT version soon, which let's kind of have more of a peer-to-peer economy where users can create spaceships and sell them to other users. And so I think there's a really interesting wave of new companies that are much more accessible. Blackbird is one in New York where it's a restaurant. It's actually the founder of Resi and Eater, Ben Leventhal, you may know him. Experienced entrepreneur. Yeah, so he's doing an NFT. It's like a restaurant thing where you can use NFTs as a way to kind of reward loyal patrons. So I feel like we're having this kind of out of the downturn. It feels to me like a lot of people are kind of saying, hey, we got to really level up our game and have really great product experiences. And we're seeing an exciting wave. And I'm excited about it.
There was a fear that a lot of these crypto projects were essentially VCs financing a group of intelligent guys who had found something they claimed was new technology. The VC fund would lend its capital and create this project. They'd issue a coin and then kind of leveraging the fact, this FOMO of Main Street Americans who wanted to participate in what was hot, they'd then buy these coins. And because there's no SEC requirements on lockups or even disclosing when you'd sell these coins, that then these VCs would basically dump their entire stake. And that these projects were not financing any sort of growth or underlying technology. They were essentially just an elegant transfer of wealth from Main Street investors to the limited partners of VCs. Do you think there's any truth to those claims?
I think it's possible. I think that, I would just say that probably the number one thing that we have asked for and pushed for in policy for years is longer lockups. Okay. So we have 10-year, we're a venture fund. All of our funds are venture funds, including the crypto funds. They have a 10-year life cycle. We push for long lockups in the deals we do, but we don't have unlimited market power. If we go push too hard, they will do a deal with somebody else, right? And so I think the number one thing that the policymakers could do to improve the space would be long lockups on every project, because I believe in that real technology takes years to build, and you need to avoid that. Yes, I think all sorts of things have happened.
But Andreessen hasn't been subject to these lockups or self-imposed them.
In all the deals we do, we have multi-year lockups.
I'm sorry, I just want to clarify this. When you invest in a crypto project and there's a coin issued, you have a self-imposed lockup on when you can sell those coins?
The lockup's in the term sheet. It's a term in the term sheet, yeah. We do and the founders do.
So the crypto projects you funded in the last few years, you have not sold coins? You still own those coins?
We have 94% of the coins that we bought, we hold in all our crypto funds today.
So wouldn't that indicate that Andreessen has taken an enormous drawdown or loss on these projects, given what's happened in the crypto market?
We're RIA. I'm not allowed to talk about our returns, but we have 94% of our tokens. Yeah, I think it's a venture capital is a highly volatile market.
And then my last case is just give us what you feel is the most compelling use case for consumers or enterprise. Say it doesn't even have to be now, but in 3 years, what do you think the use cases are?
Outside of speculation.
Sorry to keep pushing my book, but I have 7 sections at the end of the book where I go through 7, deep into 7 areas of use cases. And I talk about social networking. I talk about finance. I talk about media businesses, like NFT media businesses. I'll just give you one kind of maybe a flavor of a cool idea that I like, as that's one of the sections, which is an area called collaborative storytelling. And that the idea there is kind of Wikipedia style is internet fans get together and create narrative universes like the next Harry Potter and the next Marvel. And they get rewarded with tokens proportionate to their contribution. And then they go and the narrative universes they can create can then be licensed and made into movies and comic books and other kinds of things. Like that's a cool new idea that just sort of couldn't exist before you had crypto. But there's just like there's games. I have a section on games in the metaverse. I think that very clearly we're going to have, the so-called metaverse. I know it's jargony, but it is a thing that's going to happen. And whether I'm not talking just strictly about VR headsets, I'm talking about people spending more time in 3D worlds through video games and things like this. We're going to have more and more people in 3D worlds. They're more persistent. It becomes a bigger part of our lives. And I think an important question is, how is that metaverse structured? Is it structured with like one company owning it, like does Fortnite own it? Or is it structured like the web, like where there's a bunch of different, like it's an open system and you can add a component to it? Like that's another important, area that I'm focused on. I think, as I mentioned before, like in a world of generative AI, or let's talk about your business, the media business. The internet has operated on an implicit covenant between distribution, like search engines and social networks, and websites, right? What happens in a world where you go to a ChatGPT and you just get an answer? You don't have to click through anymore, right? So we're very soon entering a world where you don't click through anymore and you don't go. I was on the board of Stack Overflow for years. Stack Overflow data was used to train a lot of these systems, and now Stack Overflow's traffic is way down. Right. So how do we create content in the future? How do we reward content creators? So, I have a section in the book on this about like different things people are working on and ideas for like new ways to use blockchains to create business models in a world of AI systems that give you the answer.
One of the last things, I'm sorry, I just noticed Larry Fink, who was a big detractor of Bitcoin and stuff, of course, has done an about face and is calling himself a big believer. Of course, they filed paperwork for an ETF too at BlackRock. So I think the finance stuff and the speculation might be a little calmer with these new, it's part of that. It'll be part of that, presumably. That will still, I know you're not in that area, you're in the tools part, but as a speculative tool of ownership, I think this will change it quite a bit. A lot of people feel like, and then they're limiting.
Yeah, I think the sort of institutional.
Yeah, the institutional people are really piling in a lot more because it feels safer. And that makes sense. That makes sense from a lot of perspectives. Anyway, really fascinating book, actually. And we love to own. Chris, we're owners. And I am. I'm like tired of selling my stuff to other people. Anyway, again, Chris Dixon, he's one of my favorite venture capitalists, and that's a very short list. And the book is Read, Write, Own, Building the Next Era of the Internet. It's really worth your while to read it. Thanks, Chris.
Thanks, Chris. Good to see you again.
Yeah, thanks, Scott. Thanks, Cara. You too.